Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We are going to get started with our morning analysis. So here we go. Let's start with the euro dollar. Let me pull up everything here. All right. Now the euro, has obviously come off of the this resistance, or off the highs that we posted a couple of days ago. And what we're doing is we're pulling back towards like some breakout points and some pretty key support. So now I'm going to get rid of this really quick because this was more of a B equals CD type of move. We were just seeing if that's really going to come into fruition. I'm going to remove that for now. It's not something that we're dealing with currently. The support down here is, we don't need that at the moment. What I think we should be doing is recognizing the pullbacks that you've seen here. Okay, the 618 obviously needs to come front and center since we are already starting a pullback here, and you can see that 618 it comes in about a 111.70. If you get the live market alerts from last night, you can see it in the Forex wrap here. The euro dollar drifted to support and will close near the 112.35 support, which means that we may probe stops below the 112 level. 50% retracement is to 1170, resistance at 113. Last night, obviously, because of the attacks in Brussels, we did probe below 112. We took the stops below 112. We tripped them. Usually whenever you get a stops trip below like a support level or above resistance, it'll clear out stops 10, 15 pips above or below, and that's exactly what happened. We just tripped all the stops below 112 last night to 112.87. Now, do we go any further from here? We could. It's entirely possible. But and I think that right now you can see that the momentum seems to be slowing. I would think that the 618 is going to be probably fairly important today, and I want to make sure that it matches up with something else. So if you take these lows, which you got the spike low here after the ECB meeting, right? Or is that the Fed meeting? That was a Fed meeting. Sorry. After the Fed meeting, we have a 38% retracement that comes in at 111.40. So we have 111.60, 67, or 111. You can call it 111.65 and 111.43. So my assumption is, even if we get down to 111.65, you've got a lot of support not too far below that, okay? So if you're looking for longs in the euro dollar, 111.65 might be a good place to start looking, okay? Again, you have this 38% retracement of this entire move up that comes in just below that as well. So I think there's going to be some support down here. All right, now resistance, you got to figure out where resistance is at this point. I mean, hold on really fast. I'm going to remove this for a second. I'm going to remove these just so you can see what I'm doing here. So we have actually an hourly channel in the euro. Even with the the attacks in Belgium, I mean, it knocked us down, but it wasn't like wasn't like an exaggerated move, like super exaggerated, where we were down 200 pips. It was just moved down to channel support. So that tells me that this resistance is very, very critical, which comes in at 112.60. As long as we're below 112.60, the downside pressure is going to persist intraday. Overall we're in a range environment, but it's not like we're selling off too aggressively. And like I said, this 111.65, that's where the 618 is at. So I'm assuming we're just going to be bouncing around here, okay, for now. I like to see the reaction over here. But also, I mean, you could argue that, maybe a little bit of an overshoot, but this is all really, for the most part, holding, okay? Just some food for thought. I'm not excited about anything at this moment, regarding the euro, but just, so you guys can see what I'm looking at. All right, let's take a look at the cable. So pound. This thing's just, the thought process by a couple of traders in here is, with this, with these attacks, it's just going to further, push the potential Brexit, vote. Let's remove this. What we're going to do is we're going to figure out what from the actual low, trend low, which is going to be down here at 138. We bounced right off the 38% retracement. Do you see that? Just bounce off that at 142.55 to a T off the 38% retracement. So that's obviously very important support. 144.50. That's going to be important support today. 140.42.50. I'm sorry. Okay. So again, that is from the low to the most recent high, 38% retracement to the T. Okay. Low to high. You got the 618 that resides just below that too, at 142.30. But I think this 38% retracement is really sticky, obviously. Okay. Now resistance. Anybody who's looking to sell the cable is going to be selling it right here. Okay. 143.60. Yeah, any spike up there, you're going to get people trying to, trying to sell it. Okay. Excuse me one second while I blow my nose. Pardon me. Okay. Let's take a look at the dollar Swiss. Here's the dollar Swiss. And basically, whatever we got going on here is still developing. Now, the risk is because here you can see that we're just doing this. Okay. You can see we're just, it's just like that hourly channel that you're seeing in the euro. This is just the opposite, just happening in the Swissy. But you can see how vitally important right now 99.60 is for support. It's just huge support. Okay, so that's very, very important support. That gets taken out, we're gonna see. Oh, I'm sorry, 96.60, 98. Wait, hold on. That's 96.60. 96.60. 96.60, excuse me. It's wildly important support. If that breaks, we're gonna see a new move down to a new wave of selling down to this 95.50, where I'm probably going to be aggressively buying if we get down here. But I'm, obviously a little nervous with, everything that's going on in Europe. But right now it's still, on my radar of where I want to be long, and everybody should know the reason why. I'll reiterate. Um, this trend line here, it's coming in here, but the blue one that you see here goes all the way back to, to the highs out here in 2001. So it's just a place I've been planning on buying the Swissy for a long time at 95.50, 95 cents, somewhere down here. So we'll see if we can actually get down there or not. Okay. Let's go over to the okay, that's the Swissy. Let's go back over to the hourly here, or the 4 hour. Remove this really quick and see how high we can go here. It's going to be tough with what's happening in Europe right now. $97.50 probably will offer resistance. The reason why I say that, you got that spike low right there. It's a 38% retracement. So 97.50 should offer resistance. Okay, let's go over to the yen. Now the yen spiked lower. I'm still short, dollar yen. That hasn't changed. We have resistance here at 112.10. There's JT just pointed out it is a 38% retracement from the spike high over here. Okay, if you take the the recent drop, the 50% retracement came in right the same place, basically 112.20. So we'll just write down that 112.20 is just its resistance. I know we wrote down 112.10 yesterday, but this has proved to us that 112.20 is significant resistance. We are still in a bearish trend. Okay. Spike low was, as a result of the attacks in Brussels, and that was ended up being pretty much key support, which comes in at 111, whatever the low is, 111.37. I'll write that down. Okay. All right, let's go over to the Canuck, over to the Canadian, over to the Loonie. Now you guys know that we have the Canadian budget. It will be released today. It will be released right at the equity markets close. Okay. I bought the dollar Canadian yesterday. I own it, just so you guys know, I'm only up 16 pips. I own it at 130.53 from yesterday. Yes, it spiked up above 131. This spike here, this was resistance. That spike there at 131, that was during the bombings. You can see this, right? When the market got word that there were bombings. But, obviously 131 is resistance right now. High, low, 131, 131.07. So I'm going to write down 131.10. That's resistance. It's a 38% retracement. Oh wait, um, right now in a bearish trend while we're below this yellow trend line. Just want to make sure you all know that. I am trading counter trend right now. And um, if you don't know why I bought the dollar Canadian, okay, let me ask you this. How many people know why I bought the dollar Canadian yesterday? I know it's counter trend, but how many of you know the reason why? I bought the dollar Canadian because of, what's the answer? Anybody? I bought the dollar Canadian because of, not because of maple syrup. Yes, because I'm bullish. Okay. Crude. Correct. So if you take a look at crude oil, okay, those of you that guessed maple syrup, you nailed it. Nailed it. Okay, so crude, and what I didn't realize is on Friday, the May contract, we tagged previous support, current resistance, and reversed, right? Tagged it. And I said, man, I was not around obviously on Friday. So I said yesterday, while we're below this resistance, I'll buy the dollar Canadian. Small position. I'm in a small position. It's not anything big, nothing extravagant, nothing super exciting. But as long as we stay below this resistance here, I'll buy some Canadian for a dip. Now, if crude, and hopefully the dollar Canadian can get back to 132, But if crude, starts rolling over from here and it gets a little aggressive, I might change my tune. I might, instead of taking profits, I might, add. Who knows? But I bought the dollar Canadian not too far from here. At the 130, my average is 130.53. Okay, so here's the dollar Canadian. I bought it yesterday, like right around here, somewhere around here. I own it. It's not like doing really well with it. I think we're going to come back up and retest the underside of this trend line. But we had an AB equals CD. I think Dimitri pointed that out yesterday. We had a 618 retracement. Technically there's a lot of reasons why we should have stopped here, and we did. So I'm just hoping for a bounce at this stage in the game. And crude doesn't look, crude's been strong, but it's stalled the last few days, and that's something that that we need to pay attention to. Okay, and it's been, the dollar Canadian has just been brutally slapped down here. Relative strength is starting to diverge. So I can argue there's going to be a bounce. I just don't know how big the bounce is going to be. Okay. But so it is. I'm trading counter trend. That's why it's a small position. Because whenever you trade counter trend, you have to take smaller positions. All right, support. It's that spike low right there, which is at 130 and a quarter. This is the support right here. Where does this come in from? Why is that? What is that from? Oh yeah, this is the, Joe pointed this out too. This is the monthly breakout point too. That's it, right? So, and that comes in basically right here where we're at. That is another big deal, actually. Okay. So what was I going to say? Oh, so support. We'll just write down that hourly low right here at 130.20 for now. All right, let's do the Kiwi. So the Kiwi, first of all, I love the way the Aussie New Zealand looks. However, I'm a little nervous that it's going to try to set up some sort of head and shoulder pattern. So just be careful if you're long the Aussie New Zealand. Anyway, the Kiwi dollar has slipped to a 50% retracement. Let's get rid of this. I think we need that now because it never bounced. Yesterday I said if it gets up there, I'd like to short it. And the reason why, just so you know, is we have major resistance up here. And we connected this yellow line yesterday. It's basically these tops. And I said if we get it anywhere close to that, it's a good short. Anywhere close to it. Okay. That's going to be a really nice place to be on the short side of the Kiwi. I don't even know if we're going to get up there. That yesterday I was just like, well, just in case we get up there, in case we get up there, you want to have that ability of being on the short side if we can stretch our legs up there. It's trading so heavy. I don't know if we're going to be able to do it. We are at a 50% retracement right now. Okay, so this is a 50% retracement. Can we drop lower to 67 cents or this 66.90? Sure. Especially if stocks. Oh, look at crude's rolling over, guys. Crude is rolling. This is where you have to be careful being on the short side of the U.S. dollar Norwegian krona. But anyway, okay, 66.90 is support. Okay, that's support. Resistance right now, and that's assuming we get down to the 618. So I'm assuming we're going to just drop to here. Okay, probably bounce. If we can get a spike up in the Kiwi, like if we can spike back up to 68 cents, I think this is the place to be on the short side right here for today. If you can get back up here, right through there. Okay. Not saying that we're going to get up there. I'm just saying if we can, I think that's a place you want to be on the short side like that. Okay. Like the sound effects. Pew, 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 pew. All right, here's pew. This is what happens when you play too many Legos with your kids. Pew, 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 pew. All right, I'll be back in a few moments. When I come back, we'll do the Aussie dollar index. Watch the peso. I'm long the dollar Mexican peso, and it looks really good down here. I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you back. We're going to finish up our analysis here, but before we do that, just a little heads up. Equities are looking a little heavier. Crude's starting to roll a bit. Gold's starting to firm up. Just what that's doing is the euro's firming a little bit from the lows. You see the dollar Canadian's getting a little stronger. The dollar yen's rolling over a bit. Just a little heads up. The peso's firming up as the market's getting a little risk averse. Just some heads up here, okay? Just some heads up. All right, let's take a look at. We got to go over to the Aussie. Let's take a quick look at the Aussie. And the Aussie's actually performing pretty well, especially relative to the Kiwi, and that's why the Aussie New Zealand is much stronger today. But here's the Aussie. Oops. Okay. So the Aussie, like the Kiwi, pulled back to the 50% retracement. Right. So that means that obviously that's holding. That's the low that's holding right now. Same with the Kiwi. But any dip to this is you probably want to treat this the exact same way as the Kiwi. First of all, yeah, I guess we need to point this out. 618. The 618 really rejected us here. Okay, the 618, you can see that, right? Stopped us like on a dime, and that was at 76.50. So I'm going to say that 76.50 is really key resistance. Are we going to make it up there today? We could. We might make it all. This obviously we spiked, but did a nice inverted hammer, if you will, shooting star, and then reversed us. Any move back up here to 76.50 is probably going to find some sellers. All right, but the same time, I don't know how aggressively short I would get the Aussie at this point, but maybe selling it up there or buying it down here. Those are the best places to, in my opinion, to play the Aussie at this point. Either shorting it up here or being long down here. I don't think you really want to do much with it at where it currently stands. So 75.20 is the 618. Hold on one second, please. Stand by. Sorry. What did I have for the resistance here? Let's see. Resistance comes in at 76.50. Okay. And it is in a range environment, so shorting it into resistance or buying it at support, that it's just you get this like mid-range type of move unless you picked it off overnight. Luckily, during the attacks in Brussels, you just happen to have an order down there. It's not a whole lot to do with it right now. I would be more inclined to sell the Kiwi versus the Aussie, obviously, because the Kiwi's underperforming. But if the Aussie gets up here, it's probably is not a bad risk reward. I don't know if that's a trade I would do, but that's that's the place to short it if you really wanted to short it. All right, let's take a look at the dollar index. Okay, so the dollar, it's choppy as can be. This is the same, range, or excuse me, same channel that you're seeing in the euro and you saw in the Swissy. The dollar index looks to be giving you pretty much the same thing here. You can see this is how choppy it is, and this is probably why you don't want to get too, carried away with any type of, trying to get too carried away chasing the market any direction, because you can see if you get, this is what happens when you chase the market, and you're like, oh my God, look at the dollar's breaking out, and then, you get that stuffed in your face. It's same things happening in the euro, same things happening in the Swissy. So just let's see here. Okay, hold on. I'm going to come back to that in just one second. Let me remove this this fib. Okay, there we go. So we have a 50% retracement that comes into play right about there, and then you have your 618 right there. So the dollar 95.80 resistance comes in right there, 95.80. Support 95.35, let's say. Just real tight ranges. Be careful. Obviously, if we get an outsized move out of like some dollar move today, then you got to start. I would actually go back to this hourly chart right here and try to figure out why we're doing what we're doing. Obviously, if we start breaking lower in the dollar, this looks like a nice stair-stepping pattern, nice flag. This could be a, that could be basically a flag pattern. Could be. So, and if we start rallying, then you got to squeeze. That means you broke it back above this support, which that means the dollar's going to squeeze a little further, probably up. If you take, from up here through here, probably going to take us back to these highs. So I don't have the foresight to know because I'm not a palm reader or anything, fortune teller. I don't know, if we're going to start screaming through here or break down through here. And it's hard to make those types of calls, especially when the dollar is not really moving aggressively on risk appetite or risk aversion. So, I think we have, if we start getting a big move out of this hourly range, do we come all the way back up here or do we break down here? It's hard to say. All right, let's go take a look at the peso. I bought the peso on Friday. I stepped into it. I was out of town, but I saw the dollar peso down there, and I'm like, I nibbled a little bit because I knew that we bounced off of this this trendline support. My cost average is 1736. Okay, we're at 1746. What I'd be looking for is a move beyond 1760 or a break below 1722. Okay, because if we break above 1760, that means we're squeezing. And I'm trading counter trend really small, but 1760, and I'm going to start stepping up my position size. 1722, in my opinion, is really key support. We are in a range, right? But this is a real big trend line. You see it, right? What I'm hoping is going to happen is we're going to come through here at this 1760, squeeze back up above 18, and I'm going to short it again, somewhere up there. But this U.S. dollar Mexican pesos, firming. Risk aversion comes in. It's starting to, show some signs of life. So just heads up with that. U.S. dollar Norwegian krona. I got squeezed out of this last night, and when it broke above 844, that happened after the attacks in Brussels. Squeezed me out right through here. Stopped me out. I got asked, am I going to re-enter on the short side? And I'm going to tell you right now, no, because if you look at crude oil is starting to roll over. Now that doesn't mean it won't go down. Maybe the U.S. dollar Norwegian krona is a good short here. Could be. But if crude oil starts to roll over from here, this thing's going to shoot right back up to 860. So right now I just kind of want to see how we react here. We are retesting the underside of this trend line, which gives underside of this trend line. It's gives me some good reason to short the U.S. dollar Norwegian krona right now. I just don't like the way crude looks at the moment. Okay. So it throws a monkey wrench into my ideas. If crude was 43 bucks right now, I would be shorting the hell out of the U.S. dollar Norwegian krona, but that's just not the case. I'm going to leave it off for today, but we have to monitor it very closely, I think. U.S. dollar Swedish krona. Any move up towards 832 is going to be a short if you can get it. That'd be a great short if we can get up there. I just don't know if we're going to make it all the way up there. Nick shorted that spike, which was really, probably a great entry. Support will be 813. And we are still in a big range. But obviously we're moving towards the lower end of our range now. Okay, so here's your bias chart, and I am going to be taking some questions.